What makes it hard for me to accept a loss? Understanding the emotional and cognitive barriers to loss acceptance. Accepting losses is one of the most challenging aspects of investing. Asking, what makes it hard for me to accept a loss? Helps uncover the psychological mechanisms and emotional triggers that influence decision-making. Behavioral research in behavioral finance shows that recognizing these barriers is key to improving financial outcomes. 1. Loss aversion. A central reason losses are difficult to accept is loss aversion, identified by Daniel Kahneman and Amos Tversky. Psychological pain from a loss is roughly twice as intense as the pleasure of a similar gain. This creates resistance to selling losing positions or cutting losses. Loss aversion explains why investors may hold onto losing investments longer than rational analysis suggests. 2. Ego and identity. Sometimes losses feel like a personal failure rather than a market outcome. Ego involvement makes admitting a loss psychologically difficult. Selling at a loss can feel like admitting incompetence or poor judgment. This emotional barrier can override logical decision-making. 3. Regret aversion. Investors often fear future regret from acknowledging a loss. Regret aversion. Worrying that a losing investment might rebound can prevent taking corrective action. Regret aversion may cause holding losing positions longer than planned. 4. Emotional attachment. Investors may develop emotional ties to assets. Investments may feel like extensions of personal plans, hopes, or achievements. Emotional attachment makes rational evaluation harder. Detachment is key to making objective, strategy-aligned decisions. 5. Cognitive biases. Several biases reinforce difficulty in accepting losses. Sunk cost fallacy, feeling compelled to continue due to past investment. Confirmation bias, seeking information that supports staying invested. Recency bias, overweighting recent price moves instead of fundamentals. These biases amplify resistance to accepting losses and can increase overall risk. 6. Reflection questions. To better understand your personal barriers, ask, am I holding this investment to avoid admitting a mistake? Does fear of regret or loss override rational judgment? Am I emotionally attached to the asset beyond its strategic value? Final insight. Accepting losses is rarely just a financial decision. It is emotional, cognitive, and ego-driven. By asking, what makes it hard for me to accept a loss? Investors can identify psychological obstacles, mitigate bias, and make more rational, disciplined decisions, improving long-term outcomes.